Yes, friends, welcome back. So, in the previous sessions, we have learned about this thing, standard setting body. What is the standard setting process? In fact, we learned how auditing standards are set, how our local standards, our country's own standards are linked to the international standards, and local situations and local conditions are integrated into that system we have understood. And also, we have understood that auditing is the activity of auditing, and the process is highly technical in the sense that it requires compliance of all the standards as well as guidance notes has to be compliant. And after that, we also learned some aspects of qualities of auditor, what kind of qualities an auditor should have. And now, two important concepts are important for us. Uh, One is related to our this quality of auditors is the independence. Let us, as you know, in audit report, normally we write independent auditor's opinion. Auditor gives an independent opinion. So what is that concept of independence? We need to learn that thing. And next one related important concept is that professional skepticism. What is the meaning of that? We'll be learning now. So sharing the screen with you right now. Auditors independence and professional skepticism. Just a minute. Okay. Now, when we're learning about qualities of the auditor, some important things I had listed out, like integrity, objectivity, professional competence, confidentiality, and the professional behavior. All these things are important. Okay, when you talk about the integrity, what I exactly mean that even if no one is looking at you, no one is controlling, no one is supervising, you are expected to do the right thing. That is the concept of integrity. Right? Many times what happens, there may not be any authority who will be supervising or controlling or monitoring the auditing process. The auditor has to do himself. Okay, so auditor has to follow a kind of self-control mechanism or self-disciplinary mechanism. That is what the meaning of integrity. Okay, when I say auditor is supposed to be an integrated person, that means he should do the right thing even when no one is watching him. Right, so that should be one primary quality of an auditor. And the second quality is about the objectivity. What we mean is that auditors should not make any subjective judgment. Okay, his judgment should be based on certain objective things. Let us say if the auditor decides he will be satisfied with this kind of evidences. If this kind of evidences are there, then only he'll be satisfied. Otherwise, he's not going to be satisfied in a given situation. Let us say like this. But it should not happen that for one company, he is satisfying with something. For another company in the similar situation, he is not being satisfied with the same kind of evidences. That means auditor's decisions are subject. Auditor's opinions are subject. Or for one client, auditor is asking something. For other client, he is not asking. Or a given situation, for one employee, auditor may be satisfied with some kind of evidences. For another employee, auditor may not be satisfied with that. That means auditor decisions, auditor's opinions are subject. Okay, depending upon the people, depending upon the entity, he changes his mind. Okay, that should not be. So one important quality of an auditor is that objectivity. Third quality is that professional competence and due care. As you know, you have already seen the international standards as well as our Indian standards in auditing. That auditor is expected to take all reasonable care whenever he is certifying or whenever he is giving an opinion or expressing his opinion in the form of a report. He has to take due care. And he should be professionally competent to do so. That competence he should have. Okay, suppose there is something which is a very technical thing. Let us say it is something like a information system audit. If auditor is not qualified, if the auditor is not trained in that area, then he will not be able to exercise professional competence. Or let us say something like forensic or for a concurrent audit of a bank. Auditor may be having professional competence or may not be having professional competence. But one quality of the auditor is that he should have professional competence to do that. If he's not having, he should not be doing. Maybe some other firm of the some other partner of the firm may be allowed to do so. So this professional competence and due care, exercise of due care, are also two important qualities of an auditor in a given auditing situation. Confidentiality is very important. Auditor deals with clients' information. You'll be learning when you'll be learning audit of companies that auditor has got a right to access all the books of account. Maybe financial records, maybe non-financial account, non-financial books and records also. So when auditor has access or that kind of power auditor is having, that has to be handled in a very responsible manner. That information should not be leaked to anybody because it may go to the competitors. It may adversely affect the company. So auditors should ensure that confidentiality is maintained. Okay. So there are some exceptions. We'll be learning the appropriate standards where auditor may be disclosed, or auditor may have to disclose or break the rule of confidentiality. Like suppose something like auditor has to give some information as per direction of the code, or that is required to be disclosed as a professional requirement, like under peer review kind of situation. Authorized auditor is supposed to maintain confidentiality. And auditors should also behave professional. He should have sufficient knowledge and he should behave personal. He should behave in a very professional manner when handling the audit. Okay, his personal things, personal emotions should not come into picture. Okay, auditor is expected to be independent of the entity. And when you talk about this independence, two things are required. It means the independence of mind as well as independence in appearance. That means auditors not only should be independent, he also should appear to be independent. People should also look at him. When they look at them, they should believe that this auditor is independent. Okay, so there are various standards like standards and quality controls, which talks about establishing policies and procedures for handling an audit. And all these standards talks about the qualities of the auditor. And when talking about this quality, one important quality which is relevant right now is the independence. Let us understand all these qualities. If you see, the conceptual framework suggests that auditors should exercise all these things in an auditing situation. Okay, if you look at here, it talks about professional competence and due care. Integrity should be maintained. There should be objectivity, confidentiality, professional behavior, and independence. All these things we are going to learn one by one. Okay, first let me address to this issue, the independence of the auditor. As I was telling you right now, there are two aspects, or you can say two perspectives of independence of auditor. One is independence of mind. Second is independence in appearance. The code of ethics of professional accountants suggests or explains the two things. Okay, what it explains, independence is, as you can see here, A, independence of mind, B, independence of appearance. Okay, IFAC has suggested this. IFAC's code of ethics suggests independence. What is the meaning of independence of mind and what is the meaning of independence of appearance? When you look at the first part, that is what is independence of mind. If you read here, it says the state of mind that permits the provision of an opinion without being affected by influences, allowing an individual to act with integrity and exercise objectivity and professional skepticism. That means the mind of the auditor should be so independent that it should not be influenced by some other situation, some situations. Okay, his mind should not be affected by influences. Okay, his integrity, that means his attitude of doing things correctly or in a fair manner, should not be affected. And he should be able to exercise objectivity. He should not be subjective in a particular situation. And he should also exercise professional skepticism. What is professional skepticism? I'll be telling you later on. But right now, understand professional skepticism means you can something like professional doubtfulness. That means when he is supposed to doubt the situation, he should doubt. Okay, if you see that there is a correction in an evidence, he should doubt that thing. Why there is a correction? Okay, let's say there is a overwriting in a check. You should doubt that. That is called as professional skepticism. Okay, so that should not be affected. Then only you can say it independent. Right? Suppose auditor is issuing a situation, let us say MD is giving the evidence, the auditor finds there is a correction in the evidence, there is a overwriting. Same thing, suppose one employee is giving similar kind of evidence. Auditor is asking why there is a correction, I will not accept this evidence. But let us say managing director is giving the same evidence, auditor is saying, okay, MD is giving me, that should be right. Here you see, that means auditor's decisions is, auditor is unable to decide objective. Auditor decisions are subjective. For one person is satisfied with kind of evidence. For a similar kind of evidence, some other person is giving, but auditor is becoming subjective. So when you talk about independence of the mind, we are referring to mind should not be affected, or this auditor's quality of integrity, objectivity, and professional skepticism should not be influenced by the situation. That is what independence of mind. Did you understand this? Yes or no?
Yes.
Yes, sir.
Okay, let us say you are sent to an auditing situation, right? So you found there might be some employee who is very close to. Okay, so even if there may not be enough evidence, when he is saying you are convinced, but some other people are saying you are not convinced, you are verifying in detail. Okay, that means your professional skepticism is affected by that, is influenced. That means it is not independence of. That means it is absence of independence of mind. Got it?
Sir, can you please repeat?
What I'm talking about, what is independence of mind? That means your quality of objectivity, integrity, and professional skepticism should not be influenced by something else. Right? Suppose you say you are the auditor. You are going to verify something. Let's say you are going to verify sales. Okay, one person is showing you the sales register. You say, no, I'm not satisfied. Sales, I will not be satisfied. I'll be saying sales, not through sales register. Let me only you show me your let's say GST return, that will satisfy. Because the sales register is internally generated, you may make some correction. Okay, and you're demanding, show me that return, then only I'll be satisfied. And you are relying on. But same, you are visiting another branch. You find that branch manager is very familiar with you, and he's saying, okay, this is a sales. You see the sales register. You say, okay, I will accept that sales register. No need to say this. That means for one branch manager, you are asking something. Another branch manager, you are not asking the kind of evidence which you feel required. So now what happens? You are becoming subjective. You are not objective. If you want to verify revenue, you have decided that this is the what I need. But you are becoming subjective. For one person, you are saying something, another person, you are saying something. That indicates that independence of mind is not. Your mind is not independent. Your mind is influenced by the person. Got it? Our mind is influenced by the situation. Okay. So that is how independence of mind is defined. That is one part, independence of mind. How it is defined? It is defined by the International Federation of Accountants. The other part is that independence is appearance. That means, okay, you may be independent. That's one thing, but you should also appear to be independent. That people should feel that you are actually independent. How it is possible? It refers to avoidance of facts and circumstances that are so significant that a third party would reasonably conclude an auditor's integrity, objectivity, or professional skepticism had been compromised. So avoid that situation where the third party will feel that auditor's integrity, objectivity, and professional skepticism has been compromised. So it should appear like this. Okay, let us say you are auditor and client is offering you something. You are the auditor, you are verifying, let us say, financial statements. And your audit fee, let us say 5 lakh. And client is offering, okay, you are doing this thing. You also can do my tax audit. And audit fee will be 10 lakh. You find there is something fishy. That in normal statutory audit, 5 lakh rupees. In your tax audit, we feel work is reasonably less, but it's asking 10 lakh rupees. And you are accepting. If you are accepting, that means you are not appearing to be independent. But if you are rejecting, it will send a message that you are independent. Okay, if you are rejecting, that means you are avoiding the situation which will show to the external world that you are influenced. Are you getting?
Yes, sir.
Practically, you have some situations.
So once again,
practically, let us say some situation. Let us say we are saying that I will not take the name of that company, but you see what happened. The company's audit fee was substantially increased. Let us say, for example, let us say, suppose last year audit fee was 10 lakh rupees. This year audit fee is 60 lakh rupees. And after that, it is found that auditor has done some compromises. That this particular thing, that accepting the client has given you 60 lakh rupees, okay, accepting that particular offer indicates that independence in appearance has been compromised. So people will generally doubt that auditor, it seems auditor is not independent. So auditor may not be, auditor is not appearing to be independent. Otherwise, how come there is a sudden jump in the audit? There might be some other issues. Did you understand?
yes, sir.
Okay. So this is how it has been defined. You have a look here. Independence in appearance means the avoidance of the fact. So you should avoid that fact and circumstances that are so significant that a third party would reasonably conclude that auditor's integrity, objectivity, and professional skepticism have been compromised. So if you avoid that situation, that means third party will conclude that this auditor is independent of mind and also appearing to be independent. Otherwise, you may be independent, but third party may feel that you are not independent. Okay. Therefore, focus here is that the auditor not only should be independent, but he should also appear to be independent. Independence of the auditor has not only to exist in fact, but also appear to so exist to all reasonable persons. So all the persons involved is to feel that actually there is independence of mind as well as independence in appearance. Got the meaning? Okay, are you getting me?
Yes, sir.
Okay. Now, how an auditor can become independent? There are various threats to independence. If you look at this chart, you can see auditor has to balance all this. Okay, self-interest threat. That means Auditor's self-interest may be affected. That is a threat. Auditor wants to protect the self-interest. So naturally, it will affect independence. Advocacy threat. Auditor has got some other assignment where auditor is promoting the client's argument. Okay, auditor might be giving some other consultancy services to the auditor. That is the advocacy threats. Familiarity threat. That auditor is continuously doing the audit of that company or that entity for a long time. That over a period he has developed familiarity with the staff. Okay, they have become over friendly. So that will affect auditor's independence. Self-review, that is the situation that auditor has to review himself. Let us say auditor was working as an employee of the company. Next year he is becoming the auditor. That means auditor has to do a self-review of his own activities. That is a threat. Okay. Intimidation, that is one more kind of threat. That auditor is fearing that something may go wrong. Let us say his audit fee will be reduced, or next year he'll be reduced from the, he'll be removed from the auditor. So that is also one more kind of threat. So these are the threats which are affecting auditors. Okay. So threats to independence include self-interest threat, familiarity threat, self-review threat, intimidation threat, and advocacy threat. Okay. Now, one by one, let us quickly discuss these threats. And what we are learning now, we are referring to, in fact, the code of ethics which is issued by International Federation of Accountants. So IFAC has identified 5 kinds of threats. So if this kind of threats will be avoided in an auditing situation. What is self-interest threat? This occurs when the auditing firm or its partner or associate could benefit from a financial interest in an audit client. So some self-interest is in. It may be direct financial interest or maybe significant indirect financial interest. Okay, suppose auditor is auditing a bank. So there is a possibility that auditor might be or planning to obtain a loan from the bank. Okay, or if auditor may feel that the classification of the loan, whether it is standard asset or substandard asset, that affects auditor's self-interest. Or let us say auditor is unduly dependent upon the client's fee. Hence, auditor fears that he may lose a client. Auditor may fear that there is the business relationship may close. Auditor might be thinking there is a chance of employment in the client's company. Auditor may feel that fee may become contingent, fee may become subject to something. So all these things affects self-interest. So they're related to the self-interest of the auditor. So this kind of threats needs to be avoided. Self-interest threats. Got it? Did you understand what is self-interest threat? If auditor is having some kind of self-interest with the client's entity, then you can feel that there is a self-interest threat. Consequently, it may affect independence. Okay, that means it may also lead to the fact that the code of ethics of IFAC is not complied with because auditor's independence is affected by the self-interest threat. And that means auditor is not qualified or the qualities of auditors are not met. Understood this thing? Yes or no?
Yes, sir.
Next threat, if you see self-review threat. Just now I was giving you an example. When auditor, having recently been a director or senior officer of the company and now become the auditor, or when the auditor performs the service that are themselves subject matter of audit. Okay, auditor has providing some services to the client and himself auditor is auditing that clients and that services is a subject matter of audit also. That is called as a self-review threat. That means auditor has to review his own transaction. If auditor has to review his own transaction, how can he become independent? So this is a threat to independence. Okay. So threat to the self-review threat occurs when during a review of any judgment or conclusion reached in a previous audit or non-audit engagement, or when the member of the audit team was previously a director or senior employee of the client. That possibility is there. In that situation, auditor has to do a self-review. Understood?
Yes, sir.
Third review is that advocacy threat. When the auditor promotes or is perceived to promote a client's opinion to a point where people may believe that objectivity is getting compromised. That is, when an auditor deals with shares and securities of the audited company or becomes client's advocate in litigation and third-party disputes. That means auditor is providing some other kind of consultancy services to the client. So a third party or a normal person may think that auditor's independence is compromised. That is called as advocacy threat. Auditor is becoming client's advocate. So he will support the client's, let us say, assumptions, opinions, perceptions. So that is third kind of threat is advocacy threat. Fourth threat is familiarity threat. That means this happens when, in case of continuous audit. Let us say continuously auditor is auditing a client's financial statement for several years, for the last 5-10 years, he's doing that. So over a period, there is a possibility that auditor may become over-friendly with the staff members. Or there might be some other situation, let us say close relative of the audit team is working in a senior position of the client's company. Or a former partner of the firm is a director or employee of the client. Or there has been long association between specific auditors and the specific client. Or auditor has accepted some significant gifts and hospitality from the client. Client is giving some significant gift, expensive gift, and auditor has accepted that thing. Or some kind of hospitality. That means at the client's cost, auditor might have gone on holidays. This kind of situation, auditor has accepted that. This is called as familiarity threat. That auditor has become too familiar with the client. So that will affect the independence. It will affect the independence of mind. That is one thing. And it is also affect the independence in appearance. Okay. Next kind of threat is intimidation threat. This is the threat, means this is a kind of fear which occurs when the auditor is deterred from acting objectively with an adequate degree of professional skepticism. So auditor is not applying his skill of professional skepticism in a situation. Why he is doing so? Because of threat of replacement. Because he feels if he become too skeptical, or if we doubt the transaction or doubt the event, then he may be replaced. Threat of replacement over disagreement with the application of accounting principles. So auditor feels if I stick to application of this accounting principle, the client may replace. That is called as intimidation threat. Or pressure to disproportionately reduce the work in response to reduced audit fee. So auditor feels that his work may be reduced, audit fee may be reduced. So this also creates a threat. So all these 5 kinds of threat I told you, they affect the auditor's independence. Now you can have a look at this chart. Self-interest threat, familiarity threat, self-review threat, intimidation threat, and advocacy threat. Okay, did you understand up to this?
Yes, sir.
Okay. So the auditor has the responsibility to maintain independence. What he can do, he has to follow some guiding principles. First of all, he should be independent and appear to be independent. And he should stick to the fundamental principles governing an audit, like integrity, objectivity, and professional skepticism. I repeat, integrity means doing right thing even when no one is watching. Objectivity means he should objectively analyze the situation or analyze the incident before forming an opinion. Okay, and his audit process should not be subjective. That means should not be influenced by people, influenced by the situation. He should be having a clarity in the mind that what he is going to check and what are the evidence he is looking for. That is called as the objective analysis. And he should be professionally skeptical. Skeptical means where he should doubt the situation, he should doubt. Okay, that is called as professional skepticism. So these are necessary in any auditing situation. Auditor must conscientiously consider whether it involves a threat to independence. You should be very conscious to see that if there is any threat to independence, if there is a threat to independence, is not supposed to accept the assignment, audit assignment. If at all threats exist, he should either desist from the task, he should not accept the audit, or put in place safeguards to eliminate them, or take some steps so that those things are protected. Okay. If auditor is unable to fully implement credible and adequate safeguards, then he must not accept the audit. Okay, so this things or these parameters, this qualities needs to be checked. Why it is important? Because this may affect the decision of the auditor accepting or rejecting a claim. Okay, so you should take some steps to safeguard. Okay, suppose you feel that you are sending your audit team as the auditor, you are an audit firm, or you are representing an audit firm, you are sending an audit team, and you feel that some of the members of this audit team, or some of the relative of some of the members of the audit team may be working in that company. So it will definitely affect the independence of that person. Suppose you are sending a person, his brother-in-law or his brother, his sister is working in that company. So you feel there is a possibility of appearing not to be independent. So some safeguard has to be taken. Otherwise, auditing should not be accepted. Audit should not be accepted. What safeguard you can take? Just I'm showing an example. You see, this is a form, but it's a kind of declaration can be taken from the staff. That you see, if you read it, I so and so name hereby declare that except the matter stated in second paragraph of this declaration titled detail of interest, neither I nor my close family members has any professional business interest in or with the client's name. And none of my family members is involved in the activities of the organization. That means those people, those team members are supposed to give a declaration. Who are the people or their interest they should disclose? Okay, let us say some of them relatives are working, they should disclose that thing. If they have some transactions, let us say they have supplied some material or they have taken a loan, they should disclose all this. So after that, auditor has to consider whether this kind of situation, these circumstances is going to affect the independence. Here, an employee is giving disclosure that except this thing, whatever interest he is having, he has disclosed in this paragraph. Except this thing, there is no other interest involved. So on that basis, the audit firm may decide whether this is enough safeguard, whether what kind of safeguard can be taken. Or if it is felt that it will definitely going to affect the interest, then that staff may be avoided or it may not be accepted. Got it? Did you understand this? Yes or no?
Yes, sir.
Okay. So this is one practical solution which I gave you. Now, friends, quickly, let us discuss some basic things about professional skepticism. This is again one more concept. So all these concepts are important because when you go deep into auditing, the terms, these phrases are extremely important. Okay, without understanding this, we may not be able to understand the auditing standards or the technical aspect of auditing. Now let us see what is professional skepticism. If you read this slide, it has been explained here. Professional skepticism refers to an attitude that includes a questioning mind, being alert to conditions which may indicate possible misstatement due to error, fraud, and a critical assessment of audited needs. So, professional skepticism is basically an attitude which includes a questioning mind. That means where you are required to ask a question, auditor is supposed to ask a question. Auditor should alert to the conditions and situation which indicate a possible mistake. Auditor should know what is the situation. Okay, in that situation, we may think whether it is justified or not. Okay, auditor should be very alert. Suppose auditor feels that you see, client is having so much of loan, client's cost of capital is high, client has a term loan where he's paying 16% interest. And you are saying that client has parked some money in the fixed deposit where there is interest, is earning an interest of 6%. So it should have you should be skeptical. That means you should question the client why you are doing so. Okay, you have so much of loan, you are paying this much interest, then why you have parked money in the fixed deposit? Something is wrong. It should appear doubtfulness. There should be some doubtfulness in the mindset of auditor, is it not? So in the circumstances, auditor feel a person who is taking loan, he should not be keeping it a fixed deposit unless there is some mandatory fixed deposit which is required to get a contract or something like that. Is it not? Yes or no? Yes or no? Will you be questioning that situation or not?
Yes, sir.
Yes, sir.
Or something like that. You feel the client is purchasing so many things, but you feel there is a huge stock and there is a carrying cost also. And you feel that much of stock is not required. Let us say client has a stock for 6 months, but normally industry requirement is, let us say, industry standard is the stocks of 2 months are kept, but client is keeping for 6 months. So there might be doubt that whether there is any purchase. Or client has some spare parts which has not been used for, let us say, so many days. So there might be doubt that why you are keeping these parts in spare. Right. When looking at the financial statement, when you say in auditing profession, you have to be skeptical, means we are supposed to assess the condition, assess the situation. In that situation, as a normal businessman, what one is supposed to do. Okay, suppose you feel that it's a situation of rising price, the price is rising, and you feel that price is expected to come down, and a normal businessman should not purchase anything at that point of time. Then you see whether client is purchasing. You should be doubting that situation, or simply you feel some kind of correction, some kind of evidences. So you may have doubt why it is so. Okay, this questioning mind can be referred to as your what? Professional skepticism. Why you are down? Because you are aware of the conditions. And you feel that in this condition, in this thing happening, there is a possibility of mistake. Something is wrong. It may be due to error or fraud. There might be some error and fraud because of which this kind of conditions is happening. Okay, therefore, that audit evidence needs to be critically assessed. An auditor is expected to plan and perform an audit with professional skepticism, recognizing that the circumstances may exist that cause financial statements to be materially mistaken. So once the auditor is questioning, auditor feels there is some doubt, and this may lead to a misstatement in the financial statement. This misstatement may be material. There might be fraud, there might be error. So auditor is supposed to be alert in that situation. What may be the situation? Some examples let us see. Let us say audit evidence that contradicts other audit evidences. So you are collecting evidences from two sources and they are contradicting. Okay, two different sources are telling you two different figures. Okay, management has done physical verification of stock, their report says something. One independent firm has done, their report says something else. Contradictory evidences. Right. Or your purchase bill is saying something, but GST portal is saying something else. Contradictory evidences. Okay. There might be other situations like information that brings into questions the reliability of a document and responses to inquiries to be used as audit evidences. There are some information and because of which the reliability of the documents are doubtful, or the responses to inquiries which are used as an audit evidences, they are also doubtful. Auditor doubts the evidences. Auditor feels that evidence is not genuine. Auditor has got some information. So that in that situation, auditor is also expected to be skeptical. Or there are some conditions that may indicate a possible fraud. Auditor has evaluated the evidence and feel there may be a fraud because practically it is not possible in this kind of situation. Or circumstances that suggest the need for audit procedures in addition to those required by SS. The auditor is in a situation where he feels that he has to follow some additional procedures. He might have to investigate the situation if he feels. So in those situations, auditor is supposed to be skeptical. He should be very alert to the situation. Understood? What are the situations? How auditor become professional skepticism? And auditor is supposed to maintain this professional skepticism throughout the audit. Throughout the audit process, he has to, it's necessary for him to carry out and maintain this professional skepticism. Because through this, if he maintains professional skepticism, he will be able to reduce the risk. Reduce the risk, that is the risk of overlooking unusual circumstances. He will be alert. If there is some unusual circumstances, it will not be overlooked. Overgeneralizing, when drawing conclusions from audit observation. Auditor will not generalize the situation because auditor will know there are exceptions. And there are issues, there are situations where auditor has to doubt. So that risk is avoided. The risk of overgeneralization, the risk of overlooking an unusual circumstances, and the risk of using an inappropriate assumption in determining the nature, timing, and extent of audit procedure. So in an audit situation, auditor decides what is the nature, timing, and extent of audit procedure. That means what audit procedure is to follow, timing for what period of transaction is to be covered, and when that procedure is to be applied, and extent, whether it is applied 100% of transaction, 50% of transaction. Okay, so that is called as the nature, timing, and extent of audit procedures. These terms will be relevant, we'll be learning in detail. So auditor will not use any inappropriate assumptions when determining the nature, timing, and extent of audit procedure which to be applied for evaluating the financial statements. Okay, friends. Did you understand this? This professional skepticism is necessary for critical assessment of an audit evidence. Okay. It also includes consideration of the sufficiency and appropriateness of audit evidence, often in light of circumstances. Auditor may accept the records and documents as genuine unless auditor has reason to believe to the contrary. Normally that thing happens. But if there is a situation when auditor has to become skeptical, he has to be very careful about these records and documents. Auditor also needs to consider the reliability of the information. In case any doubt, or in case there is an indication of possible fraud, the standards of auditing requires that the auditor may investigate further and determine what modifications or additions to audit procedures are necessary. Okay, in case doubt, auditor may modify the audit procedure. Auditor has to consider his past experience also. On that basis, he has to decide what kind of audit procedure will be reliable. Okay. So a belief that a management and those charged with governance are honest and have integrity. Auditor may believe that, but that belief does not relieve the auditor from the need to maintain professional skepticism. That means whatever might be the situation, the professional skepticism has to be maintained throughout the audit. Okay, so this was the concept of professional skepticism. I think broadly, you have some idea. Again, recapitulated, we'll be again briefly discussing in our tomorrow's class. Today, we'll stop our session here. Okay, any query you have? No query, hopefully. Thank you very much.